We are entering into another session from the chapter Financial Management. In the first session, we saw what is meant by financial management and which are the major decisions. Now, in the second session, we are starting with those financial decisions which are taken by financial manager. And the first decision which has to be taken by a financial manager is the investment decision, so as to increase the shareholders' wealth. So, what is investment decision? Investment decision is decision regarding where to invest and how much to invest. Where are we? In which all assets we are going to invest, and how much we are going to invest into each assets. So, decision regarding that investment, regarding how much is to be invested, regarding in which all assets it has to be invested. Those decisions which are taken by financial management or manager is called as investment decision. And we are doing this investment decision, or we are making this investment decision in order to earn highest possible return for the shareholders or the investors. Those who have invested must get maximum return. That is what we said about the shareholders' wealth must increase. Wealth maximization concept is talking about maximum return must go for the investors, for the shareholders. So, in order to get a maximum possible return, we are making this investment. How much to invest and which all assets it has to be invested, or where to invest and how much to invest. And investment decision can be of two types. It can be long-term decision, it can be short-term investment decision. Long-term investment decision and short-term investment decision. When it is short-term investment decision, it is for a shorter time, as it is said, it is for a shorter time. Investment will be made for a shorter time, which we call as working capital decision. And when it is done for a longer term, a long time period, we call it by the name capital budgeting decision. So, two types of investment decision are long term and short term, or working capital decision and capital budgeting decision. Now, what is capital budgeting decision? Capital budgeting decision is committing finance for a longer time period. For a longer time period, when investment is being made, it is called as capital budgeting decision. And this is very important. We can say that investing for purchasing a land or replacing a machinery, that means it is invested for a longer time period. We will get the benefit out of that only after quite long period. So, because of that, it affects the earning capacity in long run. For the investment made, the earning will not come immediately. It may take time. So, it affects the earning capacity of the firm. And one more thing, we have to take great care when we are going for capital budgeting decision, because these kind of decisions, long-term decisions, investing in will be investing huge amount of money. Long-term investment decisions usually involve huge amount of money, and at the same time it is irreversible. Generally it is irreversible. If it is to be reversed, you may have to spend more money. So, generally it is irreversible. So, we have to take great care when we are going for capital budgeting decision. It is committing finance for longer time period. Now, coming on to working capital decision. Working capital decision is committing or financing for short time period. It can be maintaining stock. It can be purchase of something which is used for day-to-day working of the firm. Usually, because of that, we have to say that working capital is affecting the day-to-day working of the firm. It affects day-to-day working of the firm, or it is required for day-to-day working of the firm. better word is better than affecting, you can say it is used for day-to-day working of the firm, and it affects the liquidity as well as profitability, convertibility to cash or earning profit, to maintain, to make sure that every activity is happening every day inside a firm. Working capital is required, purchasing oil, repairing machines, such kind of day-to-day expenses will be met by working capital, or working capital decisions are those decisions which are looking into it. So that affects liquidity as well as profitability of the firm. So these are the types of investment decisions. Now, when we are looking at a capital budgeting decision, that means investing for a longer time period, and those decisions, when we are looking, certain factors do affect the capital budgeting decisions to be taken. So we are going to see the factors affecting capital budgeting decision. First one is the cash flow of the project. Cash flow of the project means, if you are looking at a firm, you can see cash flows into the firm and outside the firm. When we are purchasing a machine, cash flow out. When sales are happening, cash comes in. So inflow and outflow of cash happen, or money happens. So when we are going for capital budgeting decision, we have to see that how much is the inflow and outflow of cash. And especially when we are investing into long term assets, receipts must be there, expenses must be comparatively lesser. We must be able to meet. We have to see that cash receipts and payments are in such a way that it is helping, or it will make the company to work without much trouble, because huge amounts are invested. So and return from that comes at a later period. So there must be other sources, other cash inflow must be there in order to keep the things going. So we have to consider, it must be carefully analyzed. The expenses, the incomes, the expenses must be, cash receipts and payments are to be analyzed before going for capital budgeting decision. That's a very important thing. Cash flow of the project is one factor which we have to consider when we are going for capital budgeting decision. Second thing is the rate of return. Rate of return. When we are making investment into an asset, when we are making investment into a venture, we have to check out what is the return it is fetching. Return from each proposal, and risk is to be analyzed. Risk is to be analyzed. When we are investing into a fixed assets, we have to analyze how much rate of, whether it will give us return in proportion to what we are investing, and what is the possibility of risk into that. What is the possibility of risk? So these things are to be analyzed. The return from each investment venture must be analyzed, and the risk associated with it is to be considered. So both these things are to be considered, whether we will get enough return, expected return from the investment which we are making, by what time we will get the rate, what time we will get the return, and how much is the risk associated with that. It must be carefully analyzed. Then only we have to go for a decision to invest into long-term assets, or for a long term if we are making investment. And the last one is investment criteria involved. Investment criteria involved. When we are going for making an investment, various criteria can be there. It can be rate of return, it can be interest, it can be risk, it can be the cash inflow, anything, any criteria. So any of such criteria put forward is also to be considered, whether we are looking for less risk ventures, whether we are looking for high rate of return ventures. So we have to analyze before making investment. We have to analyze on the basis of criteria, each criteria, and various techniques can be used for that. And those techniques which we are using to analyze each aspect, each criteria, each techniques which we are using for capital budgeting, we call it by the name capital budgeting techniques. So, criteria, whichever be the criteria which we have fixed, it also must be considered. Only after considering these factors, it will be better to go for long-term investment decision. So, we are talking about investment decisions. We said about the classification of investment decision, and we saw what are the factors affecting capital budgeting decisions.